Okay, so 2024, what happened? Why did it happen? And what can we, fingers crossed, expect to see in 2025? Before we get into it, though, let's cue the VT.
One of my favourite shows, you know that, the 2024 Fife Property Market, and coming into 2025 and actually predicting what's actually going to happen in 2025. I'll just
Yeah.
tell you right now, I was absolutely right about 2024.
There we go. So
And the
let's see
pundits
if you're
weren't.
right.
The pundits weren't at all. They had no idea. All these think tanks, all these government bodies, all forecast the economic forecast, the inflation rates, the amount of properties were going to go up in price, transactional numbers, all the rest of it. They had not got a clue, and we got it right.
Mhm. Yeah. So let's see where
And
we
I,
are this time next year.
and I think, Sophie, that's the most important thing
Mhm.
for this. It's understanding what's actually happening in the economy in 2024, which could actually end up happening in 2025. Most think tanks actually just plug numbers into a spreadsheet and it comes out with this huge analysis about how the economic situation is going to pan out. And it's like, that's, for want of a better word, it's bullshit. It's genuinely, it's just rubbish. It's a guess at the best. Think about the
Mhm.
economic forecast in 2008 when the crash came along. You know,
Mhm.
Standard and Poor's, Moody's, all these places that gave all these mortgages all these high AAA ratings, saying they were all safe. It was all rubbish. They said that they were all safe. They said, "Oh, the economy is going to bounce. It's going to bolster on, and it's going to be brilliant." All these economic think tanks said exactly the same thing, and then 2 months later, everything crashed.
Mhm.
I think that's generally what happens, and I just think it's the media keeps it going on all the time. I mean, as an experienced as an experienced estate and letting agent in Fife, for example, I personally like to monitor the UK and the Fife property market trends all the time. People know that
Right.
it's analytics and it's data and all the rest of it. It just floats my boat completely.
Yeah.
Therefore, I'll start analysing the 2024 property market, and we'll do this now, both nationally and locally, and then we'll give our predictions for 2025. I'm pretty confident this is what's going to happen in 2025. So hold tight, anybody that's listening, and we'll go through this. Probably about 30 minutes in total. But it's really important that you actually know this, especially if you're an investor, especially if you're thinking about selling, and especially
Mhm.
if you're thinking about buying. Also, if your mortgage is coming up for renewal soon, this will give you a great insight into whether you should hold out for better rates or you maybe should fix for 2 years or fix for 5 years. This will give you a really good insight into that.
Mhm.
So in 2024, the property market, UK property market, recorded 1.2 million homes sold subject to contract, which means this figure represents a significant increase to 2023, where there was only 1,066,000 properties sold right across the whole of the UK. That's 15.4% more UK homes sold in 2024 compared to 2023. Why is that number so important? I can hear you saying to me, Sophie.
Yeah.
Why is that number so important to the health of the property market? You know, the health of of any property market has got absolutely nothing to do with property prices.
Mhm.
It has everything to do with transactional numbers,
Mhm. Yeah.
because the transactional numbers determine how buoyant the economic economy will be in the housing market surrounding it.
Mhm.
So what I mean by that, well, if you have a million houses sold in 1 year and you have a million houses sold the following year,
Mhm.
you'll be creating the same amount of jobs and
Yeah.
you'll be sustaining the same amount of jobs. So that will be a balanced market
Mhm.
overall for health of a property market. If you have a million properties for sale 1 year and the following year you had 500,000 properties for sale, half of that, basically you've got an industry like the solicitors, the mortgage brokers, the banks, the all the contractors, the kitchen fitters, the joiners, the plumbers, the electricians, they'll all have to cut back on their workforce as well.
Mhm.
So hence the reason why I say the health of the housing market is primarily down to transactional numbers. So it's really good for the health of a housing market to have a wee lift in transactional numbers, not too much of a lift though, enough to take the edge off property prices and stabilize the market overall. That's how that's so important. Now, for those of you who like property stats, Sophie,
Mhm.
do you
Yeah.
want to read a wee bit of property stats and tell us all about them and what that actually means in terms of pounds per square foot and stuff like that?
Yeah, of course. So, as you say, this is perfect for people that like the stats, a bit like you, Jim. So, the average price of the UK property sold, and when we say sold, we mean subject to concluded missives, and this is in 2023, was 354,981 to be precise,
Okay.
with an average of 331 square feet. So, just remind you of that. In 2023, it was just over 350,000 with an average of 331
£331 per square foot. Yeah.
per square foot. Yeah. Now, in 2024,
Mhm.
so last year, the average sale agreed price was higher by 1.84%, which is actually 361,529. Yet, though, interestingly, and you're maybe not expecting this, the average pound per square foot was 2.72% higher at £340 per square foot. So you had £331 per square foot in 2023
Ah.
versus 340 price per square foot in 2024.
So I understand now I understand, because you would expect that to be exactly 1.84% as well. So that means that the average price has gone up by 1.84% on that from year on year.
Yep.
But the average pound per square foot has gone up higher than that, which means the average house being sold from 2023 to 2024 is slightly smaller
Mhm.
than
Yep.
the average one the year before, because that's why the
Yep.
average per square foot is actually going up in price. So in real
Mhm.
terms, yeah, the price is actually 2.72 of an increase, but not 1.84 as you see if you take it into account. So the real measure is the pound per square foot, not really
Yep.
the actual end price at the end.
Mhm.
So let's go on about that and talk about number of transactions then. And has that risen?
Oh, absolutely. Significantly. It's significantly done because while the average price for the UK property and the pound per square foot has remained kind of relatively the same, this means that while house prices have not really risen, the number of UK homes that have sold did significantly.
Hmm.
Now, remember, the best bellwether of the health of the UK property market is not necessarily, as you've already mentioned, the UK house prices, but the number of homes sold. And this is where we say it's transactional, and
Yeah.
that's why. So always remember that. So then if you were to look at then obviously the property market, it demands a deeper analysis, and we do like an analysis, and
Hmm.
it warrants it to understand the underlying factors and what that kind of really means for the local markets, just like us sitting in Fife and the surrounding areas. But Jim, tell us kind of some of the key drivers of the UK market surge.
Okay, key drivers. This.
Mhm.
I think the key drivers of the UK property market are primarily down to several factors that have contributed to that positive momentum overall.
Yeah.
Now, the one definitely everybody mostly knows about is the fall in mortgage rates,
Mhm.
and it's weird to say that mortgage rates have fallen because mortgage rates seem about similar to what they were before, but year on year they've actually fallen. Um,
Mhm.
so, and what I mean by that is mortgage, not. I mean, everybody talks about base rates have fallen, what, 0.5% over that year. The a 1/4% reduction, then a 1/4%. I think it was in maybe was it December or was it November, possibly? But we're at 4.75 in terms of base rates. But the swap rate, the interbank lending between each other and the markets is actually less still. Hence the reason why lenders are able to offer better deals than tying into base rate, because they get their money cheaper than they do on the bank. The base rate is primarily there to take out the demand and purchasing power from existing mortgage holders, so it doesn't fuel inflation. Hence the reason why the tie-in between, if inflation's high, they decide to put base rates up higher. If inflation's low, they'll technically want to take base rates down a bit lower. But they're a bit nervous because the mortgage rates are sitting, the base rate is sitting at 4.75, and you can get good deals now because of the swap rates. But what banks are cleverly doing is they're making their mortgage rates a bit more attractive by front loading with higher arrangement fees. So what they're doing is they're offering you maybe an attractive entry rate of 4.25, for example, but they're charging you 3% as the arrangement fee at the beginning, or maybe 2%, or they may be charging you several £1,000s at the very beginning. Whereas if you don't want the arrangement fee, then they're backloading it back onto the interest rate, and they're putting the interest rate up from 4.25 and saying, well, you're going to have to pay 4.95 now if you're not wanting the arrangement fee. So then, as a mortgage holder, if you're going into a mortgage for the first time, you want to work out which one's best for you based on how long you think you're going to have the property. And I'll give you a classic example of that. If you're going to have it for 5 years, and you know it's probably only going to be 5 years because you're in a 2-bedroom flat, you're probably going to meet somebody, as we do over a period of time. You do move in together, you maybe have a family. 5 years' time, it's going to be different. You're going to be moving out. So if it's only going to be 5 years, then you have to work out 4.25. If it's fixed for 5 years, then you can do that deal and see how that works out in total cost. So the total cost of mortgage for 4.25 over the 5 years plus the arrangement fee. And then the other one is you take the cost of the total mortgage at 4.95 with no arrangement fee, and you compare the two of them. And whichever one is the lowest is the one primarily you'd probably end up choosing for that very reason. The good thing about arrangement fees could be added onto the loan as well. They don't need to be paid up at the beginning. You can pay them at the beginning if you want, if you choose to do it, but you don't need to do it. So falling mortgage rates have encouraged lower interest rates, and borrowing is more accessible and encouraging buyers who, this is all about sentiment as well. Even though primarily sometimes the interest rate hasn't dropped dramatically, the very fact that the Bank of England signals a base rate reduction gives people more confidence in buying a property.
Yeah, of course, it gives peace of mind.
It's consumer sentiment. A lot of these things are based on consumer sentiment. That's purely what it's down to. When you look at it in economic terms and you look at it in an analytical world, you think to yourself, this doesn't make sense because interest rates have only dropped 0.1%, and that's no significant to anybody in terms of the mortgages. But because base rates have dropped a quarter point, people go, happy days. We can get a mortgage now. It's like, wait a minute, it's only dropped 0.1%, really. But see what I mean about consumer sentiment, how important that is. So these are all the things that it take into account at the very beginning in terms of that. Now, the next one for me is probably one of the key drivers, and I spoke about inflation as clearly influences the base rates, which influences obviously mortgage rates and what everybody's getting right now. Inflation is a figure, but the most important one out of that is inflation measured against wage growth. So rising wages have potential for buyers to actually have greater financial confidence, enabling them to consider property purchases that they would otherwise not have. But the one key driver behind this that you've got to be aware of is wage growth is still at over 5% year on year. And yet inflation is sitting at 2.6% year on year. So wage growth is almost double what inflation is just now. When you look at inflation underlying as well, you actually see, when you look at the underlying inflation, like household costs, utility costs, food and drink costs, things that you actually consume every single day and have to do every single day, they're a lot higher than the core inflation at 2.6. They're about 3.5 and above in terms of where they are. So the banking is still quite nervous about that. And so when we see this prediction of we're going to have 5 base rate reductions this year, according to the Bank of England, it's suddenly gone down to 4, and then suddenly it went down to 3. Have you noticed that? It suddenly went down to 3, and it's like, I have a sneaking suspicion it's maybe only going to be 2, if that at all, because core inflation underlying to the inflation figure we're getting now is higher, and so is wage growth as well. But so just be aware of that, that's all. This will determine whether you fix into a 2-year or a 5-year deal to hedge yourself. So what do I mean by hedge? It's almost like putting a stop loss. When you're investing in shares, for example, and you invest in a share and it's maybe £1,000 for the share. So you invest it at £1,000 and you say, if it goes up to 1,200, sell it. But you also, when you invest as well, you sometimes say, look, if it goes down to 900 or 850, sell it. You put a stop loss in place. That's kind of what 2-year and 5-year fixed rate deals are giving you, because they're giving you certainty that that's always going to be the price. Come hell or high water. It gives you confidence that you're always going to have that. So if you know what your salary is, and you know what your circumstances are all the time, you know what your budget is for spending every month outside of that, the biggest cost to you is probably going to be, apart from your food and your utilities, and it's going to be your mortgage. If you can hedge that, in other words, take the risk out of that fluctuating, either going up or down, and avoiding these stop losses or stop gains or whatever it is, then, and give yourself certainty, then you'll have peace of mind in the fact that you can then budget for everything from there, because you know exactly what you're paying every month for your mortgage. It's kind of just like, it's like, I suppose it's a bit like paying rent. You know what you're paying for rent, and the rent is going to be the most you'll ever pay for a property, because you're not responsible for the repairs and improvements or anything like that at all. Whereas a mortgage, that's the least you're paying for a property, because you're responsible for the everything, the repairs, improvements, and all the rest of it. It goes with it. So that's why the difference between why some people rent and some people actually choose to rent and some people actually choose to buy is they're prepared to take that risk and of the additional costs. So that's why wage growth is so important as well. The other thing that really drives it for me is employment. We're still at a record low employment. Now, if you read any economic book from what I learned in the very beginning, between 4 and 6% unemployment rate is classed as a full employment economy. Now, we're sitting at 4.6 just now in terms of the UK economy. America's kind of similar as well in terms of theirs. So it gives you confidence that there's enough tax receipts going in, because people are paying, if people are employed, they're paying tax towards the exchequer, and therefore it keeps the economy going, and it keeps all the services going as well, and it keeps everybody in a job. Again, because it's job creation, all these taxes that go into it, and it keeps people in a job, and therefore when they're spending money, they're creating goods, and everybody keeps everybody else in a job as a result of it. Hence the reason why you don't want it. Yeah, and it's a stable market, and it fosters a sense of security. Again, I come back to saying it's all about what people think. It's consumer sentiment. It's how they think. I've seen economies tumble just because people thought it was going to all crash. 2008, the run on the banks. How many banks disappeared overnight? Dunfermline Building Society gone. I was sitting in the room with the head of the Dunfermline Building Society when he got the call. And you basically say there's a run on the bank. We're done. You better come quick. The next day, they've been taken over by the Nationwide. So it just shows you why that is an important indicator as well in terms of the low employment level. How important it is. It gives people consumer confidence, and it also and enables them to make lifetime investments in things like buying a home. They don't get jittery. They don't get nervous about anything. I think for me, the last one in this scenario, you said, is probably the changing preferences. I mean, post-pandemic shifts and how low and where people want to live continue to actually play a significant role in this, with buyers actually seeking properties that align with their evolving lifestyles. I've never left the house. Not literally. But when you think about it, I still work from home.
Mhm.
Although, sorry, I'm in the new studio.
Yeah, of course. Yeah. You're not worried.
And you're at
Yeah.
home as well, aren't you?
Yes, I've got a beautiful
But
place. Yes.
when you think about it, if you're in that position, you could literally work anywhere else in the world that you want. And I
Mhm.
think the change in preferences that people have enables them, rather than actually spending an absolute arm and a leg working in London and having to pay for London, which has got an average price point of £550,000 for a property,
Mhm.
whereas you look at Scotland, average price point, £200,000 for a property.
Mhm. Yeah.
Now, you might not get paid as much, but when you look at the ancillary jobs in London, they don't get
Mhm.
paid they get just paid just the same as the people in Scotland as well. So it's like, well, why would I want to live there if I could just live in Scotland, have an easier life, and actually have a more affordable property? And rather than have to squeeze in and rent, basically a standard box, so to speak, a studio flat,
Yeah.
I could buy myself a 3-bedroom house
Mhm.
in Scotland. Why would
Yeah.
that's the sort of things that people. So these changing preferences that over a lifetime have actually made a significant difference.
Mhm.
But then when we think about this, Sophie, then, and I'll put a question to you then, what about the Fife property market then and the comparative analysis? How does that then look, if that's the case, when we come back to that, bringing
Yeah.
these things into account?
Yeah, of course. So let's bring the attention to Fife. Now, it is important to recognise that local markets can behave differently from kind of national trends. So when we say Fife, what does that mean? That means your KY1 to your KY12, and then your KY14, so your Cooper up to KY16, your St Andrews postcodes. That's what we mean when we refer to Fife. Now, interestingly, in 2023, there was 5,382 Fife homes sold for an average price of, and you've already just mentioned this, 203,450, which is an average, because of course we like to compare it to the price per square foot as well, is
Yep.
191. So that was for 2023.
Mm-hmm.
But if we just do it to last year in 2024, there was 5,730 homes sold. So your 5,382
Yeah.
versus your 5,730. And that was for an average of 211,323. Now, I feel like
Yep.
you're doing something on a calculator there, Jim. I knew.
Yeah, I was working out the difference in pound per square foot, how that's changed. So 2.6 is the difference in pound per square foot. So pounds per square foot has actually gone up year on year by 2.6.
Uh-huh.
Number of homes, in terms of the number of homes, the value. Let's look at the value as well. 211,323 minus 203, 450 is 7873 divided by 203,450 equals 3.8%. So that's the other way round. See
Yeah.
that? So property in Fife has gone up on average, according to this, about 3.9%.
Yeah.
But the average price per square foot is only going up 2.6%, which implies you're getting more value. You're getting more space for your money,
Mm-hmm.
for year on year for property in Fife. So the price
Yeah.
has gone up for property in Fife on average, but you're getting more space for that price now as in the year before.
Yep, absolutely. But the most important thing out of all of those kind of facts and figures is the increase in the number of transactions.
Yeah.
And that is a 6.5% increase in Fife homes sales 2024 compared to 2023. 6.5%. And as we've stated before, and we really do highlight
Yeah.
this, number of transactions is a much better bellwether of the health of the property market rather than the
House
house
prices.
prices.
I
Yes.
can't emphasize that enough for anybody tuning in right now and anybody listening. Forget house prices. It is completely irrelevant in terms of increases in house prices. It's only relevant if you're an investor. If you're a buy-to-let investor, or you're an investor, or you're buying a house to flip it, or whatever it is, the house price is the only important thing, because obviously that's where you make the gain. If you're a normal buyer of a property and move in and an owner, and that's your only house that you own is the one that you live in, the house price doesn't make any difference at all to you, really, because all the house price does is allow you to trade from one property to another. So it just hedges you against any increases or decreases in property and keeps you where you are. Because, for example, if your house is worth £300,000, and it goes up, say, for ridiculous sense, it goes up 20%. So you've got a £60,000 overnight. Okay, so if you go to buy another property just like yours again, you're going to be paying 360,000 for it. So there's no change because yours has gone up, theirs has gone up. It's the exact same house in the same area. So do you understand then, anybody tuning in, why it's not really that important about the house price value in terms of increase year on year? It probably is important for the point of affordability. The very fact that you don't really want house prices to increase dramatically year on year at all, especially from a buyer and a seller point of view, because then a stabilization in the market and keeping house prices the same is good overall for people that are just trading house for house and just to live in, and that's it. The only difference house prices make is to an investor. And it's what you said, Sophie, and I can't emphasize it so much, is people need to understand the health of any property market is the transactional numbers year on year. That's how you know. That's how you know how your economy is going to be robust as well. That's how you know if your economy is going to grow, or if it's going to increase, or if it's going to decrease, or if it's going to stay the same year on year by the number of transactions. Because as I said before, out of the transactions comes the mortgage broker working for you, the solicitor working for you, the estate agent working for you, a letting agent working for you, your contractors working for you, fitting a new kitchen, a new bathroom, carpets, electrics, gardens getting done, all the rest of it. All these jobs are sustained around that economy as ancillary businesses work towards there. And so that's the most important thing that comes out of that. And that's why that bellwether is so important, at what you said there. So what's going to happen in 2025 then, Sophie? You know, what local influences do you see shaping the Fife property market, for example?
Okay, so now, yes, Fife, now that doesn't exist just in isolation. It's shaped by a range of local factors that are often similar yet slightly different from national trends. Obviously, you've already touched on in great detail, you know, the change in employment levels, ongoing infrastructure developments, and shifts in the local demographic profile can all impact that. For example, look at Levermouth, for example, the start of the year versus the end of the year, and how much the investment with the train station, that commuting links, how when we continue to do weekly updates, how Levermouth area is standing so strong, and it is an absolute seller's market just now because of the investment and the infrastructure.
Hot sellers market.
Oh, absolutely.
Two areas in Fife are a really extreme hot sellers market: Levenmouth and Dunfermline. Two areas which are balanced just now in Fife. A balanced market to almost like a buyer's market on a smaller scale. Balanced to buyer's market. Two areas right now, balanced to buyer's market: St Andrews and East Neuk. They're balanced right now. So in other words, there's not going to be a huge swing and increase in price. There's not going to be a huge decrease in price. It's probably going to be stable, if not just a wee bit below, for the higher price properties in these areas. And it's purely the fact that there's an oversupply, and that's what it is just now in terms of the number of buyers. Because the number of buyers stays the same, more or less on average, every single year, year on year. That's just a fact. That means the other markets. What are the other markets? Like Kirkcaldy, Glenrothes, Cooper. What are these markets like? Well, they're still hot sellers markets. So they're not extreme, but they're still hot sellers markets just now. So they're still going quite well, which means the majority of stock is actually sold. It has been put on to take into account the affordability levels and then the transactional numbers as well. That's probably the most important things. So you're absolutely right. Changing employment levels, infrastructure developments, leaving train station, huge investment that's going in. As money gets poured in, you look for trends, for example. There's trends that give this away, and it's way before you even see it coming.
I know what you're going to say.
Well, possibly. Well, what would you say then? And I'll tell you what I was going to say.
You've said this before, and I'm sure it was you, that you basically look at where they're either opening a Starbucks or a McDonald's. If a Starbucks
Nailed
or a
it.
McDonald's is opening up, that's an area. And that's
Nailed
what I
it.
thought you were saying.
If you see McDonald's opening up in your area, you know damn fine there's going to be a surge in activity and there's going to be more money coming into that area. McDonald's aren't daft. They've done their numbers. They understand exactly the analytics behind it and human behavior and everything goes with it. They spend millions, hundreds of millions probably every single year on doing that research. They've got full-time people involved in this, finding the right sites for them in the right areas. It make money for them, and they're not going to pick an area it's not got any money coming into it or any future of growth. See that? Starbucks is exactly the same. You can see Burger King. Look at the retail park it appeared in Cooper all of a sudden and how that's gone. That's not just out of luck. That's just planning. That's over the years. And then you get announced it's like, what on the horizon? You've got 1,500 houses going to be getting put up on the plan on the other side of Cooper. Then you begin to see, wait a minute, there's going to be more money coming in, more jobs created in the area as a result of that. Because again, people have got to look after these houses. People have initially got to build these houses as well. You've got finance going into that area. You've got jobs creating that area. You've got people spending money to live in that area locally as well. So you've got that huge surge that will come out of that overall. So when you look at these ones, these are really good indicators in the very beginning. I mean, regional policies can influence market activity as well. I mean, understanding these nuances is essential for property owners and landlords who want to make strategic decisions. In other words, should I buy long term? Should I just buy refurb and flip in short term? That's the sort of, regional policies will make a fundamental difference. One of the most important regional policies right now in Scotland is the possibility of rent controls and how that will affect the buy-to-let market. And we can see exit from, more landlords leaving the market now than actually coming into the market. So there's a net loss of landlords. And some people can wave the flags and go, hooray! But the reality is, people have still got to live somewhere, and there's people genuinely that just want to rent or can't afford to buy, just can't buy. Maybe poor credit rating. Maybe they don't have a job in the first place. Maybe they're not capable to have a job. These people still need housed, and that's why it's important to have a healthy private rented sector as well as a healthy social rented sector as well, and in unison towards that to help that overall. What should we be doing then when looking ahead? And we talked about for 2025. What advice can you give homeowners? And I'll maybe touch on what I could say for landlords. What advice would you give homeowners?
Okay, so as we enter 2025, the UK property market shows continued promise, yet we can't say a one-size-fits-all approach works in Fife. Obviously, we saw that as we broke down the figures and the statistics, you can see the differences. National patterns interact uniquely with local circumstances. I mean, it is vital to focus on what's happening kind of on the ground here. Now, local market knowledge is a key advantage for Fife homeowners that are planning to sell, or as you mentioned, obviously landlords managing their portfolios, but evaluating your property's position within the Fife market could make all the difference in navigating opportunities or mitigating those challenges in this year ahead. 2024, it was strong. It's critical to go beyond the headlines, and local insights do often reveal opportunities that kind of those broad trends don't really capture. So of the 6,372 homes that left Fife estate agent books in 2024, 5,204 of these homes, the owners sold and moved on. So that is an 81.67%. So there was 6,372 on the books, 5,204 moved. So missives were signed and they moved out. However, you may be thinking, okay, what happened to the rest of them? Where's the last chunk of the 1,168, which equates to 18.33%? That's actually withdrew, unsold, Could be for obviously a number of different reasons, different
Yeah.
scenarios. Out of the buyer's control, out of the seller's control, things do change. That's life.
It could
But
be as well that people have decided to rent it instead. They've taken it off and actually decided to rent it, and hence the reason why it's actually been withdrawn.
yep.
It could be a member of the family decide to move in and buy it privately. So there's a lot of differences behind that. But predominantly, England tends to have a lot of withdrawals, primarily because it's kind of the way their system works. It's like
Mhm.
they tend to, the English market tends to be like, oh, we'll put it on and suck it and see. And whereas the Scottish market's like, no, you've got to pay a lot of upfront costs first. You've got your home report and then you've got marketing fee. So you've got to be pretty serious before you put it on. Hence the reason why the Scottish market tends to be less volatile than the English market. Plus the fact, it's clearly obvious that you have sole seller agreements in Scotland. You have multiple seller agreements in England. Sole seller agreements tend to have a lot better stability because when somebody comes along and makes an offer, there's no gazumping once it's accepted.
Yeah.
It's just frowned on completely by the Law Society in Scotland, and they have the whole market sewn up with solicitors. You can't do anything in Scotland unless you're a member of the Law Society to do with conveyancing and signing off. Whereas in England, it's a free-for-all. Hence the reason why gazumping happens a lot. People fall out with each other, and therefore quite a few properties are withdrawn as a result. But definitely, you're absolutely right. The local market knowledge, key advantage of the Fife homeowners plan to sell, manage portfolios as well. I think elevating I said it right about elevating the property, and 2024 was kind of strong. It was a buoyant, healthy market. Prices were challenged at the top end of the market, as opposed to the lower end was quite easy to sell. Affordability, more than everything, eh?
Yep,
It's interesting.
absolutely.
We are getting comments, sorry, for the people on YouTube, we are getting comments, and somebody actually says, why are they not engaging with the chat? And I'll be honest, you've not got anything relevant to say what we're talking about. It is not an open forum. So unless you're saying something about what we're talking about, we'll not refer to you in the chat as a result of that. So if you're wanting to engage us, engage with you. If you're making a comment, it has to be relevant to what the topic we were talking about. We've got all planned this all out. We've got the statistics, analytics for everything. So unless it's a comment towards that, then we will refer to you and we will talk about it with you if that's the case. Okay, so hopefully that's clarified for the people saying you're not engaging with the posts, and so it just proves that we're live.
There we go. So then, what's the key to selling your home in Fife then? What would you say the key is, Jim?
I think you need to add on there a realistic price, though. Selling your home in Fife is a realistic price. Looking at these statistics that we just spoke about, over 3/4 of the property listed for sale in Fife go on to actually sell. The highlights, this highlights really an essential truth about the Fife property market. The pricing your home realistically, it's got to be. There's a lot of rhetoric. I'll be honest. Doesn't matter. I could get a different home report from another surveyor, from another estate agent, or whoever it is. It's it can change. Sometimes it is a matter of opinion, depending on what comparables you're actually using. So yes, you can start higher, but you might be unrealistically higher. So you have to take that into account with the very fact that you might at some point in time have to then realign your price to a lower price point as an entry level to attract a buyer from a different buyer's sector. So what I mean is, by everybody up to 50, 100,000, maybe you've got a property, the 100,000 is probably the right level, but surveyor comes in and says, I actually think probably 110 is okay. And you think, wow, that's brilliant. Well, then if it's no moving at 110, you've got to be realistic, because you kind of thought in the first place 100,000 probably was the price. The estate agent maybe told you that as well. So then you have to come to a conclusion that's like, you need to realign your price in order to attract people up to the 100,000 point now. So hence the reason why you move it down to round about the 100,000 point on there, and then that attracts that audience. So you introduce your property to a new audience. That's where I think is the crucial factor, the single most crucial factor in getting a successful sale is realistic pricing.
Yeah.
Many estate agents are obviously clearly are really encouraged to overprice or overvalue to win the business. But this
Oh,
approach can
1000%.
it can significantly hinder your chances of selling, especially in a competitive market like Fife. I mean, it may be a hot sellers market, but when you look at the East Nuke and the North East Fife area, it's not. It's balanced. And it's so it's a buyer or a seller's market, depending on how attractive it is and the high price point it is in comparison. So that's where you have to be realistic, because there's a lot of stock in these areas, which and there's only a certain amount of buyers every single month as a result. That's what you have to take into account. I think a lot of it's to do with the draconian attitude of the Scottish Government at this point in time with the second homes, licence, and also the second homes council tax policy, and then also in St Andrews especially, the number of houses, new builds, are actually getting built just now, and they're giving away huge attractive offers. You could buy a £550,000 house with literally little money down, and absolutely no stamp duty. They're just giving you that away. It's like, we'll pay your stamp duty. That's fine. That's okay. If you can get a bonus about £36,000 and your stamp duty paid, which is money in the fire as far as I'm concerned, because it's just taxed to the government, then why would you not be taking that? So that's where the attractiveness of buying a new build to a lot of people who have a low deposit as a barrier, as an entry into that market for these areas. So that's why new build is affecting that market as well at this point in time. I mean, they will all sell out at some point in time, and the market will stabilize again. But what that time happens is how long is a piece of string.
Absolutely.
What has the research then revealed about properties listed at the right price?
So there was research done, and it was done by Denton House, and it actually went into the detail of listing the right price from the start. You're far more likely to sell quickly and successfully. And me and Richard actually did a show on this last year about in great detail about getting the right introductive competitive price.
Yeah.
So for example, homes that sell within the first 25 days of being listed is a 94% likelihood of actually reaching that completion and missives being signed, and obviously a successful move. However, if a property lingers on the market, sticks, as we like to say, for over 100 days, and the homeowner does eventually agree on a sale, the actual chances of that sale going on to exchange, complete, homeowner moving in, plummets dramatically to 56%. So first 25 days, 94% success rate. Over 100 days, right down to 56%.
And if I was to ask myself, why do you think that is, Jim? I would actually, my view to that is possibly the eagerness of either the seller or the estate agent or both to actually just get us sold on that property, rather than actually qualifying the buyer properly in the beginning. I mean, it's easy, it's easy in the first couple of weeks to say, yeah, it's sold. I've seen it happen. I've seen other estate agents do this, because we've had it as a knock-on effect to us, where their property was reliant on selling in order to get ours, and it fell through. And then we later found out that they hadn't qualified the buyer properly in the first place, which is what the problem was. So we've now gone on to making sure we more or less make sure that they've qualified their buyer. And that happened recently in New Gilson, where we sold one and they insisted that they had their house sold in St Andrews to buy the one in New Gilson. And I said, so what's the position of your seller? And they went, oh, I don't know. What, has your estate agent not told you? No. So they went back and asked them, and they said the position of their seller was, with the other estate agent, was, oh, they've not got their house in the market yet. Sorry? It's like, what? So how could you have sold it if you've not even got your house on the market yet? That's frightening, isn't it?
It's scary, but it does happen.
It's not uncommon. It's not uncommon. But so you have to make sure you understand that, and I think that's why it plummets, because it's been sitting on the market for a while. So we'll just take anybody that's got a pulse that agrees to a sale, and they'll not qualify correctly as a result of that. So I think that could actually, for any estate agent tuning in and listening to this, because we know you do, if you want to make sure after 100 days that your property actually goes through, then I would suggest you actually qualify your buyer in the very beginning to make sure they're in the right position. In other words, they've got the right mortgage. If they're a cash buyer and they say they're a cash buyer, then get their solicitor to put their head on the chopping block and say, yes, I have seen it, they're a cash buyer and they have the money for it, or they're in the right circumstances. Get their solicitor to put their neck on the line. That's what you do. That's how you get. That's how you get that up from 56% to the 94%, more or less, what they do in the first instance. You make sure you qualify the buyer properly in the beginning, and just don't accept anybody that's got a pulse that just wants to buy it. I think that's the most important way to do it.
Yeah.
You've also got to make sure you understand the intricacies of the market and can provide honest and expert advice on the property's values. That's another thing I would say to the estate agent if they're tuning in. And you need to make sure as well you aim to set a realistic price that maximises your chances of selling while achieving a fair and competitive market value.
Yeah.
What I mean by that, if your home report's at 250, 300,000, if your home report's at that level, then I would, and if you're happy at 300,000, for God's sake, don't sit there and expect another 10 or 20% over. If somebody comes along and says, look, I could do the sale, he's in the right circumstances or she's in the right circumstances, they've been qualified properly, they can proceed quite quickly, they can align with your goals for your next property, then why would you not do that?
Yeah.
It reminds me of Deal or No Deal. You know, the box, like, hey, here's my box, woohoo, that sort of thing. It's like, this is what it's like. You come along and somebody offers you 300,000 for your property. It's valued at 300,000. And so you've opened the box, it's got 300,000 written there. The banker phones you up. You go, hello, banker. And the banker goes, yeah, okay, I'll offer you the 300,000 as well. And then you go, actually, I'm wanting the 305, really? All right, okay. So are you going to risk losing somebody for 300,000 that's in a position to do everything for you for the sake of £5,000? Is that really the logical thing to do if it allows you to do everything you want to do and move on? That's only the only question that the seller can answer. Are they willing to risk that? Are they willing to take that risk? Or do they have a realistic view, a realistic proposition about the way the world is working right now? Even the ones that have been in the market for a long time as well, Sophie. People have been in the market for a long time. There is, with all the estate agents, for example, in the areas, the North East Fife, as I said, they have to take a realistic view about the market now is not the same market it was maybe a year or maybe a year and a half or 2 years ago. Depends how long you've been on. I mean, you can see yourself. When you go through a list, you see how long it's been on because all these websites tell you now.
Oh, absolutely. And when you go out to appointments and people say, oh, we've seen that one sitting for a long time, and you actually say to them, well, actually, it's actually had 2 offers on it, and they're actually at home report or just over, but it's not the 15, 20% that the client was expecting. And then they'll go, oh, really? They just see it's been sitting and think there's been no activity. No, there has been. There's actually been offers. You've just not accepted them. And as well, something we educate on
that tends to be with us, but I couldn't say my hand on my heart I would know that about any other estate agent if that's the case for them. They would be the ones that would have to tell that story. Be interesting if they put their comments in here. I'd be interested to hear their comments.
Something we also say to people as well, if you've been on for a while, what does a refresh home report look like as well? Because after 3 months, you need to get a refresh done. The market's changed since when you went on the market. So actually, what does the refresh look like? Because the surveyor
it can be a different market. I mean, Fife's come in at 2.2% year on year, according to Land Registry statistics. I predicted at the start of the year it was between 1% and 3%. This year, I'm predicting again between 1% and 3%. I don't see on the horizon these huge, massive swing. I mean, it's in the Courier anyway. The Courier actually asked me for a comment on it and put it together, and I was quite surprised about the other people's aspirations about the property market and how they felt it was going. And I thought there's a lot of just agreeing with all what the think tanks think, but I don't see what the think tanks see. I don't see that. I'd see a different economy. I see a different interest rates, a different base rate decisions by the bank. I just see it differently, but it's backed up with proper thinking through and analytics are in the current rather than actually if this happens or if that happens on a spreadsheet, this is where we might be at the end of the year. So I think that's what you need to take. And I'm quite conservative with small c, I would say, or prudent is another word I would use, because being an accountant by trade previously, I tend to look at things like that and think on the. I play the downside, but I could see the upside in most situations. I could see the upside in every situation, but I do play the downside just in case. So there's a fallback position. So you've always de-risked your situation, so you can actually you can still be able to move regardless, and irrespective of the price point that you thought you were going to get in the first place, because you had erred on the side of caution and made your plans on maybe the downside just in case that did happen. In the any case, but we'll always shoot for the stars. You never know. You catch the moon on the way down.
Yep.
If you don't catch the stars, you'll catch them on the way down. That's how you do it. So if you're eager to move, want a reliable professional approach to selling your home in 2025, we're here to help at the end of the day. It's working together to get a standout. As I said to you previously, when I walk into a house, I ask, apart from the obvious, why am I here?
Yep. What can we do to help?
I know I'm here to sell your house, but what problem am I here to solve? Is it because you've got to move quickly? Is it because you've got to downsize because you've got a problem with the stairs? Is it because you've got a new job and you have to move within a certain time frame? Or have you got all the time in the world? That, to me, is the most important question, because it's aligning your goals or their goals with your goals and making sure that you're on the same page as them. It's not just about walking in and selling someone a house. It's about helping them manage their life as it happens throughout the process and all that in that instance. So tailored advice, just get in touch with us, stick something in the comments, message us direct, or you can give us a call on the old phone system. The old phone system, eh? It's like I was going to say you could write us a letter.
Yep. Write a letter, send a pigeon, whatever you need to do.
I tell you what, you'll not remember these times, but that's what used to happen. People would put letters through your door and say, I'm thinking about selling my house is in the stage. And that's the type of things. Or you actually walked into an office. There was no email. There was, no WhatsApp. There was no messaging on Facebook. There was no out of hours service or anything like that. It was like, if you don't turn up between Monday and Friday, between 9 o'clock and 5 o'clock, by the way, we're closed for our lunch. That's what the old system used to be. We're closed for lunch. Everybody went away for lunch. The office got closed. That's how estate agency used to work. If you didn't turn up to the office to say, you wouldn't be getting a viewing at a property. Or the only other way you could get a viewing is you actually phoned them, and then you kind of still had to turn up anyway to make sure you were who you were. I don't know why, but that's the way the old system worked. And nowadays it's so progressive, and it's so many ways to contact us, for example. You could literally get us through everything through WhatsApp.
Yeah, we're accessible.
WhatsApp. Sometimes it's a good thing for the sellers and the buyers. Sometimes it's not a good thing for the person at their end. It can be a bit overwhelming over a period of time. But however, you make sure that's managed, don't you? Final words on 2025. Where do you see it going, Sophie?
I see it being another, as we said, the word strong. I see it being another strong year. How we've come out of December and what the figures look like when I just did the update. When people think it goes quieter, this isn't the time to sell. There was more buyers than there was sellers in December. We're going to continue that on into January, February, continue on. So it's going to be a strong year. And the only way that you can ensure you're included within that strong year, if you are in the mindset that you're selling, is, as we always say on these shows, get your ducks in a row, get yourself organized, get all your information, and get an expert out to see you, sitting in front of you, because that's your dedicated time to get an accurate valuation, not an online one that's such a ballpark figure, or a desktop, or one from a year ago that's probably out of date, or your mortgage has done a drive-by or something like that. Get an expert sitting in front of you, facts and figures. It's your dedicated time to ask all your questions. And obviously your show that came out last week, interview your estate agent as well. Have questions for them. Be ready, because you're selling your biggest asset. So make sure
Yeah.
you're organized, ask questions, and then we can discuss what we can do to help you along in your journey. But get yourself organized, get your ducks in a row, and know what you're doing, because it is a big thing. You're selling your biggest asset. So just be organized and
I
ask
think the
questions.
one for me is just to finish off with that and go on the back of that and just reaffirm. It's when you said get your ducks in a row. I don't think most people understand what ducks they need to get in a row, and I think that's why it's more important to actually get the estate agent out way in advance, so they
Yep.
could actually tell you what you need to be getting in a row in the first place. Because it's like too late by the time you've. And I've seen it before where it's like, oh, I've fitted a new kitchen, I've done the bathroom, I've put a new heating system in, and I'm like, whoa, wait a minute, how much did that cost? Oh, about 70 grand. You'll
Yeah.
never get that back.
Nope.
That's a worst case scenario where I would say that's why you need to get somebody out beforehand, an estate agent, to go over that with you first.
And if you're thinking of selling in spring, summer, you need us out now so that we can tell you why you need to go to market now. But let us have that obviously time with you and spend time with you.
I think you're too late for spring, to be honest. I think people that want to settle in spring should have sold in October.
Oh, November, yeah.
Yeah. Yeah, I think more now. You're probably 6 months away, so you're sitting in June, middle of the
Yep.
year. That's when you'll be finally sold by if you go in the market now.
Yep.
And it's to do with conveyancing. It's to do with everything else. It's to do with all the average time to sell a house in Fife is 2 months. You can tell that because you can just look at the number of stock that's sitting on the market for sale at this point in time in Fife. You could compare that against the average of 550. Well, we've said it there. The average sold in Fife is the average number of houses sold in Fife 5730 divided by 12. The average every month is around about 500 properties. So if you've got 1,000 properties, which is probably what's on the market now, then effectively you've got 500 selling every month. You've got 2 months worth of stock to sell. Therefore, the average time to sell in Fife is 2 months. And you look at that, January to February to March, and then your 3 months conveyancing, on average, I think, April, May, and June. There you are. You're in June to get over the line. Okay. Thanks for coming on. And
Yes.
we'll finish off there because I could talk forever. Everybody knows that.
Yep, absolutely. Take care. Bye for now.
Bye-bye.
Bye.